The global economic recovery was asynchronous and divergent in the first semester of 2021, primarily stemming from different policy stimuli and pandemic handling in each jurisdiction. Global financial market uncertainty remained elevated, particularly towards the end of the first semester, as a corollary of the highly contagious Delta variant of COVID-19 and early signals of tapering policy by the Fed. Despite such an inauspicious backdrop, domestic economic recovery momentum has been maintained, primarily supported by solid export performance, rising international commodity prices, and stable rupiah exchange rates. In line with economic gains, financial system resilience in the first semester of 2021 was maintained. The policy response instituted by the relevant authorities was key to maintaining financial system stability. Economic financing showed signs of improvement in the first semester of 2021. The bank intermediation function is improving, with further opportunities to revive lending. A flattening of the COVID-19 curve has led to increasing public activity. Consequently, corporate sales are improving and demand for new loans is growing. Recovery signals have improved risk perception in the banking industry, leading to lower lending rates and reviving lending. Household demand for loans and consumption are improving. In addition, some households are transferring assets from third-party funds in the banking industry to financial assets for investment, such as retail SBN and shares. Non-bank financing continues to support the economic recovery. The resilience of the non-bank financial industry has been maintained on the back of lower financing risk and solid capital. Financial system resilience in Indonesia has been maintained, primarily supported by solid capital and loose liquidity conditions in the banking industry, coupled with contained credit risk. The corporate sector has maintained adequate liquidity and repayment capacity. Despite maintained financial system resilience, several manufacturing industry subsectors have been severely impacted, thus demanding attention. MSME loans have charged into positive territory on growing demand, supported by the guarantee program and interest rate subsidies by the government. Consistent with stronger demand, MSME performance is also improving, particularly amongst export-oriented MSMEs. Notwithstanding a Delta variant surge of COVID-19 towards the end of the first semester and the ensuing mobility restrictions are expected to subdue the pace of economic recovery. Pressures are expected to accumulate in the corporate sector, thereby impacting the performance of households and financial institutions. The Fed's expected tapering off could also intensify potential risks. Compressed demand for financing is predicted in response. On the supply side, risk perception in the banking industry could potentially increase, with the banks expected to become more selective when dispersing loans to the real sector. Seeking to maintain and accelerate national economic recovery momentum, Bank Indonesia, the government, the Financial Services Authority and the Indonesia Deposit Insurance Corporation, under the auspices of the Financial System Stability Committee, continue to strengthen synergy and coordination in accordance with Act No. 2 of 2020, while taking extraordinary actions in the form of emergency measures and recovery stimuli based on the jurisdiction of each respective authority. In terms of synergy and coordination, the Financial System Stability Committee launched its integrated policy package as part of the national policy mix to recover the corporate sector, with a focus on priority sectors, namely growth drivers and export-oriented businesses, while increasing economic and financial inclusion. Bank Indonesia has maintained a loose monetary policy stance and historically low policy rate, while strengthening rupiah exchange rate policy to preserve exchange rate stability in line with the currency's fundamental value. Bank Indonesia has maintained a loose monetary policy stance and historically low policy rate, while strengthening rupiah exchange rate policy to preserve exchange rate stability in line with the currency's fundamental value. Bank Indonesia has maintained accommodative macroprudential policy to revive lending to the real sector, while sustaining financial system resilience to accelerate the national economic recovery. The policies taken include relaxing down payment requirements on automotive loans, increasing the loan-to-value ratio on property loans, improving prime lending rate transparency in the banking industry, strengthening the macroprudential intermediation ratio, maintaining an accommodative countercyclical capital buffer and macroprudential liquidity buffer, as well as introducing the macroprudential inclusive financing ratio. Bank Indonesia continues to strengthen payment system policy by accelerating the development of a digital economic and financial ecosystem. National policy synergy is supported by strong international coordination and cooperation in various forums and international organizations, supported by the implementation and expansion of international cooperation. Bank Indonesia's success in terms of maintaining financial system stability through an optimal policy mix, despite unprecedented pandemic distress, has garnered international recognition, receiving the Best Systemic and Prudential Regulator in Asia-Pacific Award in 2021. Entering the second semester of 2021, Bank Indonesia expects to maintain financial system stability in Indonesia despite the onerous challenges faced. Bank intermediation is projected to improve on the back of export-oriented businesses and adequate bank financing capacity. Financial system resilience is projected to remain intact, supported by solid capital and loose liquidity. Economic and financial inclusion to remain a priority through policy innovation and implementation. The key to successfully improving economic and financial conditions is inextricably linked to executing the 1 prerequisite and 5 policy measures. Upbeat public expectations and optimism are expected to accelerate the national economic recovery, including intermediation. Bank Indonesia continues to strengthen policy synergy with the Financial System Stability Committee and other relevant government ministries and agencies to maintain financial system stability, revive financing and stimulate economic growth, as well as increase financial and economic inclusion. Bank Indonesia presents the 37th edition of the Financial Stability Review. Synergy reviving intermediation, accelerating economic recovery.